Welcome to the Wealthsteading Podcast. This is episode 516. Today is April 3rd, 2026. I'm your host, John Pugliano. I'm also the founder of Money Manager at investmentwealth.com. Today we're coming to you impromptu. We didn't announce this. We'll see if anybody shows up and we'll take questions if there are any. But I wanted to, one thing is we're trying out new equipment. We wanted to check that out. And then I also wanted to just end the week with just kind of a quick message on the markets. My son Joe's with me again today. Happy Easter, Joe.
Happy Passover.
Well, thank you very much. Appreciate that. Happy Easter and Passover to those of you in the audience that celebrate those holidays. We wanted to just talk about what's going on with Iran. You know, my reoccurring theme is that I see this as an investment opportunity. I don't want to belabor the point, but I hear so much negativity that I want to just reinforce it. You know, if you look at the stock market this week, it's a short trading week. The market was not open today, so we only had 4 sessions yesterday, ahead of, possibly having an amphibious assault from Marines. The S&P 500 closed up for the week. It was only up, I think, 1.6%, but it was up on a week, a long weekend that possibly people worried about World War III starting. So that shows me that I think it's a very strong market. And sure, the market's down, but even over the last 3 months, the S&P 500 is only down. I think the last time I looked, let me see what my note says here. Over the last month, it's down about 4.28%. Over the last 3 months, it's down less than 4%, like 3.8%. So hardly a major sell-off. I just don't think the fear and panic that's in the media is being shown in the marketplace. And beyond that, I wanted to review some stocks, and we're going to go through a list of stocks here. These are in our portfolio, so full disclosure, we own all of these. I generally like to talk about stocks that I own, right? Whether they're doing good or whether they're doing bad. I want to talk about stocks I own, not stocks I don't own. Analysts seem to always want to talk about things they don't own, but I believe in eating my own cooking. And so when it comes to my portfolio and things that I invest my client money in, I also make sure it's what I invest in as well. So we're going to go through this list, and I purged out any of the obvious companies that would do well during a panic, with a war crisis. So defense contractors like Northrop Grumman, or the oil companies like ExxonMobil, Chevron. I've pulled them from the list. And we're going to go through about 20 companies here. I want to see if you can see a trend. And these have all performed in the last 3 months better than 17%. Joe, what do you got?
All right. So we're going to start from lowest performer to highest here.
Okay.
Starting with Honeywell, 17%.
Honeywell, they make sensors, electronic components, excellent company, sell everything from automotive to building to, they're in the defense business as well. Excellent company. What else we got?
Jabil, up 17%.
Jabil, it's been one of my favorites for the last probably almost 2 years now. They're one of the few U.S. pure play companies that do outsourcing for electronic components, printed circuit boards. A lot of the things that have moved overseas to Asia, they still do it. And hey, they are headquartered in one of our favorite places, Joe. Where is that?
St. Petersburg.
St. Petersburg, Florida.
Up next, Westinghouse Air Brake, 18%.
Westinghouse from my hometown of Pittsburgh, or Pittsburgh, as some people like to say. They are railroad-related company, everything from railroad engines to components for the rail cars.
Freeport-McMoRan, 21%.
A mining company, primarily copper.
Cameco, 23%.
Cameco, another great performer over the last couple of years. Canadian uranium miner. So hello to all of our Canadian friends out there. Elbows up.
ASML, 23%.
Another international stock that is the highest tech in the semiconductor equipment manufacturing sector, and I believe they're in the Netherlands.
Target, 23%.
Target, can you believe Target is maybe has finally bottomed out, but they're doing, tell me that again?
23%.
23% in the last 3 months. And that, the jobs report came out today. What was it, Joe?
Better than expected, right?
As always, right? Better than expected, or worse than expected. Somehow the analysts and the experts never get it right. I think it was 170,000 new jobs, certainly a lot more than they expected. So maybe that's helping retail.
Carpenter Technology, 24%.
Now, Carpenter is a specialty and a very high-end precision metal fabricator. You could argue that they're defense related, and that's why they're up so well. But they've been up basically as long as Boeing has been in a recovery. So I left them in the list. But Carpenter, a little known company, but extraordinary, very high profit, and a company this is really, I think, going to continue to grow.
Southern Copper, 25%.
Another copper miner.
FedEx, 25%.
FedEx surprised me. We've owned FedEx for quite a while now. It isn't something that would normally be in my core portfolio. I don't like owning, it's not really an airline company, but obviously their business is all with aircraft. Because aircraft can be so expensive to operate and so many bad things can go wrong, I usually shy away from them. I may not, on this list, I don't plan on selling anybody anytime soon. If I did, probably Target and FedEx would be ones that are not part of my overall core. They're obviously not what I would consider part of my industrial tech sector. So, but still, it's I think performing near all-time highs.
Globalstar, 27%.
Globestar GSAT, right, is the ticker symbol on that. They have been another phenomenal performer for the last year or so. What do you know about them?
Well, recently, I think yesterday, right, Amazon came out and said they're looking to potentially acquire them to compete against Starlink.
Yeah, and they really showed up on that news. They're already, I think, have something like a 20% ownership from Apple. That's what got me interested in them whenever it was, a couple of years ago, 18 months ago. When I saw that Apple was making acquisitions into them, I thought that would maybe be a good place for me to be investing as well. And just as a side note, when we did one of these episodes last time, people were asking about what leading indicators and things do I look at. It's not so much about macro conditions or whether the market is, above or below a moving average. I talk about a lot of those things, but it's much more nuanced than that. And I want to be looking up and down the supply chain. And when I see a company like Apple wanting to own bits and pieces of other companies, if they're publicly traded, I look into it because it's maybe something I want to own as well.
Up next, Lam Research, 27%.
Lam Research, another semiconductor equipment manufacturer.
Micron Technology, 28%.
Memory chip.
Applied Materials, 35%.
I'm seeing a trend here, another semiconductor manufacturer, equipment manufacturer.
Intel, 36%.
A semiconductor manufacturer of its own, in its own right, and one that's also been resurrected from the dead. I mentioned Boeing, although they're not on the list. Intel, if you remember when I bought it, I forget when we went into it for the first time, but it was much like I talked about when we went into Boeing many years ago, where it wasn't that it was risk-free, but I just couldn't see Boeing, and we're going back all the way to like 2019 and all the troubles they've had since then and through the pandemic. I couldn't see a company like Boeing, which literally is, at least at the time, was the largest industrial manufacturing company in the United States. I couldn't see them going bankrupt. It isn't that it couldn't happen. Remember, General Motors during the financial crisis went out of business. So it isn't that it's risk-free, but I just thought that Boeing was too critical of a company and it wouldn't be allowed to go out of business, right? Too big to fail. Intel, I've always felt the same way with that, although it hasn't been easy feeling that way with Intel, but they've done extraordinarily well lately.
Up next, GE Vernova, 37%.
GE, another power play. They're integral to the power generating companies. They make all the turbines and the nuts and bolts of energy generation.
Someone's saying your mic needs adjusted.
Oh, We might be. One of the things I mentioned, we're looking at some new equipment. We were having some mic issues before. Maybe we're still having them. Are we getting a static, or in the chat room you can tell us what you're hearing there? I'll continue to talk, I guess, until then.
Okay, Dell, 38%.
Dell Computer, we all know those guys.
Generac, 42%.
Generac, emergency power generating company.
Seagate, 55%.
Another semiconductor memory company.
Vertiv, 61.
Vertiv is a pure play infrastructure on the data centers. They do all the data center infrastructure.
Okay, Corning, 68.
Corning, they make the glass that's on the touchscreen, any type of high-tech touchscreen displays.
And then last, but I think your favorite, Ciena, 91%.
Ciena has been an amazing company, and this goes back, if you look at these guys during the dot-com bubble, they were a classic dot-com bubble collapse. I think they were up to over $800 a share or something at one point, and now I think they're in the $400 range. But they've been a phenomenal, probably our best stock here over the last 12 months. And they're still up. How much in the last 3 months?
91%.
91%. Extraordinarily. We recently went in and bought some of their suppliers. Off the top of my head, I can't remember, Joe. Is it Lumina? Might have been one of them.
Ticker's Light.
Ticker's Light, L-I-T-E.
Yeah.
And the other one, do you remember who they are? I can't think off the top of my head. Something with a C. Cognitive.
Oh, CEG, is that it?
No, that's one of the nukes. I think it's Cognitive or something. Anyways, we bought it just in the last few months. You can check that out on the blog post. In any case, Joe, what do you notice about those 20 or so stocks, 22 stocks you went through? None of them really related directly to things that are going up because of the war, meaning they're not ExxonMobil, they're not Chevron, they're not Northrop Grumman. So what trend do you see in most of those stocks?
It looks like the AI trade is alive and well.
I would say the AI trade is not dead. I mean, you hear about all the circular investing, you hear about all the, you see how down the Mag 7 are right now. But when you look on a weekend like this, where potentially there could be an amphibious assault going on in Iran, the war potentially could be escalating. Personally, I don't think we're going to see much of that, but who knows? I don't know. I can't predict the future. In any case, though, the market is telling us that there is a lot of strength and resilience in the trade that's involved in technology, artificial intelligence, data centers, large language models, and more than anything, just electrification. And that's been part of what I've been trying to invest in for the better part of really coming out of the pandemic, with an emphasis on not only technology, but the industrial side of technology. So not just the big high-flying technology names, but the companies that do the nuts and bolts of the overall economy. And that's what's throughout my 140 some stocks that I own. One final note on these stocks, Joe, we talked about it before. Do you remember what I'd mentioned about most of these stocks, or many of these stocks, or what?
They're all pretty old.
Old, yeah. I think of that list of 22, I think at least 10 of them are at least 75 years old. And actually, many of them much older. A lot of these companies have their origins in companies that were 120, 130. I think Corning Glass goes back like 170 years old or something. So phenomenal. This is just a short list. I just want to emphasize the ones that are up in the last 3 months, but just to show you that maybe things aren't quite as bad as everybody says. And these are long-term opportunities. Who knows what's going to happen next week, next month? But over the next 3 to 5 years, I think this electrification and industrial technology trade has a lot of room to go.
Sounds like there might be some issue with your mic, but
yours is fine. So Joe's mic is okay,
that's what they're saying.
but my mic is not. Huh, okay. And I did all the talking. Well, next time we'll let Joe do all the talking. Any questions from the chat room?
No.
Nobody? Okay, hey, appreciate you guys stopping by impromptu. Listen, I want to just wish everybody a happy Easter, or those of you that celebrate. Passover. The best to you on that, and just God bless everybody. Until next time, best returns.